All right, crypto crew, buckle up. Like a really bad hangover, we are still recovering from that over $19 billion wipeout that we saw across crypto markets. Bitcoin hanging on right around 111,000, Ethereum floating with 4K, altcoins getting crushed, bleeding out. But here's a twist, okay? Gold and silver are ripping higher, and I absolutely have a solid, defensible case that Bitcoin can catch tailwinds from the gold rally. I have institutional, data driven, and macro aligned information, not just the digital gold hype that most people throw around. No, I'm going to prove to you that gold strength signals global liquidity rotation, inflation hedging, and capital fleeing sovereign risk, all of which historically pull Bitcoin higher in the following weeks. And I'm going to break it down in this video. So get ready. We're going to go a little long today. So if you're not into long videos, just go someplace else and watch the other fake guys talk about nonsense. We're going to get really into the nitty gritty right here. We're going to focus on why things for Bitcoin, in my opinion, can actually start to show you the direction that Bitcoin's truly going to head in. And the gold rally is actually leading the way. All right, welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin crypto action. Make sure you give us a like. Make sure you hit subscribe if you have not already. And of course, make sure you come on over to X, follow us on X, where we talk about Bitcoin crypto all day, every day, because we're crypto maniacs. All right, let's get right into the rant. Okay, I've been forced up the gum tree. People, saying on the YouTube, "Hey Tom, look, every time you show gold strength, you're actually undercutting your case for Bitcoin to go up because gold strength shows Bitcoin weakness." Yes, okay, I can understand that, but really, what really want to get into really is let's start thinking like institutions. Okay, like this is like the core thesis of this. My idea behind this is that Bitcoin is a high beta expression of the gold trade itself. Okay, when we see gold rally, now not so much silver. Okay, silver, yes, silver is catching the tailwinds from gold. Yeah, people are getting long silver because they couldn't afford gold, whatever. It was a great play. If you bought silver at 28 bucks, you doubled your money, right? So right now it's trading like 52.94, all-time highs, right? Okay, so when gold rallies, it's rarely in isolation. All right, it's rarely in isolation. It's signaling a regime shift in global capital preferences. And what is causing the rally in gold? Well, it's away from fiat confidence, right? So people are buying gold because they don't trust fiat currencies. Isn't that the reason Bitcoin exists? Just saying. It's away from real rate strength. We know that even though if the G7 or the G20 raise interest rates, it really means nothing because the fiat currency behind it is kind of eroding very, very quickly. It's a movement toward hard assets, and it's a movement toward hard assets and scarce collateral, right? That's one of the main reasons as well. Now, Bitcoin being the digital, unencumbered, 24-hour, 7 days a week high beta cousin of gold, tends to benefit from the same macro vectors of that power play in gold. But it has leverage and reflexivity. Leverage and reflexivity. I'm going to explain both of those terms. So I have, well, I have a legitimate macro correlated case. I have one now. I want you all you guys and gals, you hear my rant. Yeah, come on over, leave some comments for me. Tell me why you think it's wrong, or maybe I'm trying to point you in the direction that's a little bit different in thinking. Okay, I'm trying to get you to think more institutionally instead of just knee jerk reactions. Now, a knee jerk reaction would be, yeah, my guy on the YouTube saying, Tom, every time you show gold rally, you're showing Bitcoin weakness. That yes, okay, but there's a correlation, okay, and it takes a little while. I didn't say that Bitcoin was going to take off immediately. I didn't say that. If you go back and look at the videos, what I said was there's a I'm thinking there's going to be a break. There's going to be a break between gold rally and Bitcoin kind of like staying stable or actually going down. I actually did a video. We had a title of a video. So anyway, macro tailwinds align. Okay, so if here's where I'm saying that falling real rates equal hard asset boom, right? We know that. That's what's happening with gold. So gold's rally is being driven by expectations of a lower real yields, renewed quantitative easing, and definitely currency debasement anxiety. The exact same forces historically that ignite Bitcoin cycles. Both assets thrive when liquidity is abundant and fiat trust erode. We know that we're going to go into a quantitative easing in the United States again. Yes, the fiat currencies, the trust is eroding in British pounds, euro dollar, U.S. dollar, Japanese yen, Russian ruble, Chinese renminbi. I mean, it's all the same stuff. It's all just tied to like governments that are just overspending themselves into oblivion, right? So, gold is the slow money hedge. Bitcoin is the fast money expression of the same damn trade. It's the same damn trade. That's what I'm trying to get to. So think of it like this: gold tells you where the smart sovereign money is going. Bitcoin tells you where the speculative capital are going to flow next. That's what we're trying to say here. Bitcoin and gold, right? We've said this before. How many times have we said look at Bitcoin, look at gold, right? Gold leads, Bitcoin pumps. Gold leads, Bitcoin. What I'm saying is going to be a decoupling. That gold can still continue higher, and Bitcoin's going to catch the tailwind from it. And I'm gonna get into it. Okay, so right now, gold ETFs, right, have seen steady inflows. Bitcoin ETFs, IBIT, FBTC, etc., mirror that pattern on a small scale right now. Okay, gold's legitimacy wave in the 2000s, like GLD launch in 2004, preceded a decade-long institutional adoption curve of gold. Bitcoin is mid-cycle in that same curve. Now with regulated ETFs, custodial rails, and basis trade infrastructure. Okay, that's what I'm saying. As gold normalizes as a reserve hedge, Bitcoin rides the second derivative. It becomes the performance hedge for allocators wanting higher convexivity. Convexivity. Okay? Now, I hate throwing these terms around. I feel like I gotta put my suit and tie back on, sit in a boardroom with all the boring talking heads, and go, oh, convexivity and reflexivity, come on, But anyway, unfortunately, it's only the term that I can use, convexivity. Okay, so look, we got fiat erosion. Does anybody disbelieve that? Is there anybody in our group that actually says, no, fiat currency is as strong as they've ever been and they're great? Does anybody believe that? I would think that nobody's going to raise their hand with that, right? So when we get a fiat confidence erosion, which is what we have, we get the store of value barbell. Everybody runs looking for store of value, right? So when investors worry about sovereign debt, which they do, fiscal blowouts, or currency credibility, portfolios move towards a store of value barbell. Another old Wall Street term, okay? Gold, conservative, slow moving insurance. Bitcoin, speculative, high growth hedge. They serve different investor segments but share the same narrative foundation: protection against systematic I lost my word there. Systematic fragility. So we're looking. That's the issue. Okay, a systemic like implosion. They both serve that purpose to prevent against something like that. Okay, so now historically, during gold runs, bull runs. So now we're going back to 2009, 2011. Okay, 2019, 2020, 23, 2025, Bitcoin's beta to gold's returns increased, meaning Bitcoin amplified the gold trend. Not so much in the early years, but it's happening now. So we're getting like a liquidity and reflexivity like feedback now. Because if we look at overall, and I'm going to get into like the curve, but if we look overall, gold attracts who? Gold attracts central bankers. Okay, what else? Who else do they attract? Well, they attract investors that basically are looking to prevent their money from eroding. Now, who does Bitcoin attract? It attracts traders, it attracts hedge funds, and now it's attracting ETFs. So when global liquidity expands, both are going to rise together. But Bitcoin structure, it's like a limited float, leverage, and perpetual contracts give it a reflexive upside. Now, what is this reflexivity I'm talking about? It's a George Soros term, okay? It basically refers in economics to how participants' perceptions can influence market fundamentals, creating a feedback loop where beliefs and reality reinforce one another. Okay? Now, the spread between spot and the perpetual basis widens during gold rallies, showing speculative flows are chasing momentum. Okay, so you got to keep an eye on that. Basically, that's why I was telling you got to look at the crypto stocks to make sure there's no contagion here. All right, and so that's reflexivity and why Bitcoin lags early in the gold move. Then it rips once gold stabilizes and liquidity rotates into risk. That's the key. Reflexivity is why Bitcoin lags early in the gold bull run, then rips once gold stabilizes and liquidity rotates into risk. All right? Now, there's a correlation proof here. Over the last 24 months, Bitcoin and gold showed a zero point 0.6 to zero point 0.7 positive correlation on major liquidity shifts, Fed pivot expectations, fiscal headlines, geopolitical shocks. Okay. So what does it mean? What does it all mean? A correlation value. When you have a positive one correlation, like one, okay, positive, it's a perfect correlation. Means that the assets move lockstep up and down together perfectly. When you have zero, okay, no relationship, when you have a zero point 0.0 correlation value, there's no relationship, they move completely independently. When you got a negative one, there's a perfect negative correlation. One goes up, the other goes down. So when I say Bitcoin and gold have a 0.6, 0.7 correlation, it means that roughly 60 to 70% of the time, Bitcoin moves in the same direction as gold. And those moves are statistically meaningful. They are not random. All right, so Tom, where are you getting this from? Where are you just pulling this stuff out of the ether? No. It's based on a 90-day or 180-day correlation window. Common in quant analysis. Yeah, I put on the suit and tie. I looked at the quant analysis. I also looked at the macro analysis. Okay. Now, here's the thing Bitcoin tends to outperform gold by 5x in those periods once volatility normalizes. This is what we're saying. I'm not saying that as gold runs higher, higher, Bitcoin's just going to go immediately with it. I'm saying that, yes, it will catch the tailwinds of it. And because of the correlation of 0.6, 0.7, it's going to run. Now, of course, the short term, yes, we could have the to and fro. We got levels that we're going to get into. And we're going to go over. But really, Gold draws, the gold rally draws attention back to sound money principles, right? Scarcity, sovereignty, and anti-inflation assets, right? That narrative primes both retail and institutions to seek the next evolution of that thesis: digital, portable, yield integrated sound money. Gold captures trust, Bitcoin captures aspiration. That was the whole idea of uh, this whole experiment, right? Was that Bitcoin was not tied to anything, and it was basically capturing aspiration. People can basically break away from the banking sector. Now, all those guys are arguing like, "Oh, Bitcoin," Well, then I guess you're just, a traditionalist, right? You don't believe in or you're not looking forward. You're not forward thinking enough to see Bitcoin is actually going to be really a huge stable asset that the G7 and G20 are going to need to rely on because they have destroyed the confidence in their systems. The- Nobody believes in their systems. Nobody believes them anymore. Now you look at politicians, you basically could see right through them. They just look like, I don't even know. I mean, I listen to these guys and I'm like, oh my God, that same old story again used to work before. It does not work anymore. Okay, so really, Bitcoin's next tailwind is going to be because of the gold's rally. All right, so now here's the arguments. Right, I know I'm going long on this. I'm already 17 minutes in this. I get it, but I had to really dig in because I see people that are argue your case, man. I'm arguing this case. Okay, so here's a skeptical argument for you. Gold and Bitcoin compete for flows. Yeah, but they serve different liquidity classes. Gold equals reserves, Bitcoin is speculative yield. Both benefit from distrust. Do we have distrust? I would say we do. Gold is a physical hedge. Bitcoin is a risk on tech, right? Bitcoin trades risk on intraday but responds macro wise to real rate cycles, just like gold with higher beta. Gold is owned by central banks, Bitcoin isn't. Yeah, true. But ETF structures are functional equivalent of a reserve mechanism. And central banks are starting to get into Bitcoin. Just look at Trump. Institutional custody for Bitcoin equals new sovereign vault. Now, convexity is a measure of a curvature, a relationship between an asset's price and interest rates. So when we say gold is the benchmark store of value hedge, Bitcoin is the high volatility convex hedge. The correlation of zero point 0.6, zero point 0.7 confirms they are in the same risk cluster, but Bitcoin gives you asymmetric upside per unit of risk. Ah! All right, let's get into the breakdown. I'm sorry we went along, but I told you we're going long because this is what we do. We get into the weeds. Let's look at Bitcoin right now. Short term, we're going to break it all down for you. Bitcoin is stuck in a tight range between the 108 level, 1088, and this 112, 146 now. Unbelievable. This level needs to break now, right now. So, after the tariff shock that triggered one of the largest liquidation events of the year, that 19 billion wiped out in a single day, it's like a bad hangover that we're trying to recover from right now. Right now, Bitcoin actually drifts to what? 109,635. It's got to get above like 112. I'm gonna move this up a little bit. I have to go up to 112. I got to go up to 112.8. It's got to get above 112.8. Right now, we are drifting in between these 2 points short term. No, I am not taking any singing lessons yet. I do believe the 108 is going to hold, and eventually we will pop up through this and start to show some strength in the coin itself. But right now, it's getting a little bit more difficult to defend the rally right now, okay, as this thing moves on. But if we look at the flash crash and the COVID crash in 2020, we had a 56% dump. Right now, the tariff crash, 18% dump. I'm not saying I want another 40%. That's for sure. I don't want that. But right now, it was a brutal dump. We had disbelief. Then we got euphoria. The 2020 crash started it all. We're thinking the 2020 tariff crash just wrote the same script. We're looking for the breakout. So markets always shake out weekends before the breakout occurs. So we could get we have more turbulence coming. But I'm telling you that the case that I have for gold, I think is a solid case, and you should just do some research on it, see if what I'm telling you is correct. But Bitcoin is definitely lagging global liquidity and gold right now. M2 is surging. Bitcoin is still asleep, but it's not for long. Liquidity always chases risk, and that's the case I have for the Bitcoin rally. So the catch-up rally is going to be brutal. Now, if we look at the 4-year cycle, if you guys are into cycles, and Frank is into cycles, he's also into moon phases and stuff like that. He's got a lot of wild ideas, but hey, they work out for him anyway. If we look at the cycle, right? People are screaming, the 4-year cycle is dead in Bitcoin. The 4-year cycle is dead. Repeat after me. The 4-year cycle is dead. No. Bitcoin's just never moved on schedule, okay? What truly drove every peak? Liquidity, easing, capital rotation. The Fed just flipped. They're going to ease. The real driver is here again, and it's monetary easing. We just went over that. It's going to change everything. Yeah, just be patient. Get into our pro group. We'll help you out. We go short, we go long. Okay, it's not like when I talk about upward movement in Bitcoin, I'm talking about the overall movement. I'm giving you the points in the short term where the resistance is. I'm giving you where the support is. Now, I can't come to your house and take the trades for you. I could, as long as you have lots of espresso, and then on Friday you got to have a lot of Weiss beer, German wheat beer. I love German wheat beer. But just let me know if you want me to come, and you got to pay off. Obviously, you got to pay for the plane ticket or whatever. But anyway, we need to get through this level. We need to hold this level. I'm giving you the points. I said this was the resistance level. Okay, market came up, touched the resistance. Look, crashed down. Said we need to get over this point. Doesn't do it. Comes back a little bit lower. What do you want me to do? Okay, we go short, we go long. I'm not telling, anyway. So anyway, when we look at this, we're knowing that Bitcoin right now is like the favorite quarter is back. I'm rushing a little bit because I know you guys, 22 minutes in, you're still talking, still bloviating. Look, 3 months, that changed everything back in 2024. Bitcoin pumped 80% the last time. Same window, just opened again. Bitcoin's seasonal strength isn't a theory, man. It's not a theory. It's a pattern that you got to find and you got to look for. And we're thinking it just got reactivated again. Now, again, get into our free group. We will go over all this stuff for you. Now, I'm going to jump right over into Ethereum. And here we go. Man, Ethereum, the liquidity is stacked and packed. It's chipping away at resistance. What you're seeing is a slow accumulation of Ethereum. Now, Bitcoin, obviously, the dominance is up again. It's back in the spotlight. So Ethereum right now, once we get the clean breakout above, I'm going to say 4,800. Actually, where's the Ethereum breakout? The breakout, 44,770 is the breakout. Okay. Now we came up on October 7th. We rallied to 4,758, like $10, $12 away from the breakout, and then we cooled off down to 3,436. So I'm going to put the support right now at 3,436. I'm going to put the resistance right now at 4,758. The breakout above, say, 4,800 is going to start to clear the way towards the 5,005. Okay, that's what I'm saying. So we're seeing Ethereum rock into 10,000 and above. Okay, but the rally is going to be historic. All right. So right now, Ethereum is showing a little bit more pain. It's roughly down 2 to 3% this week. It's trading right now 4,054. Buyers have so far defended the 4K, but the momentum, it looks like they're slowly accumulating. They don't really want to show their hand. So interestingly, on-chain accumulation by large wallets is increasing, a sign smart money is scaling in quietly while retail just sleeps on it. Okay, so watch the 40, like the 4007 area we got to break, but really the warning would be a break above like 4200 would be a sentiment shift. All right, so we got Ethereum. If we look at it itself, we got two bullish retests on the weekly EMA. Last time it happened, we had a 70% rally in 6 weeks. Most miss the entry because they fear what's going on when it's coming off. Okay, they fear the dip. Okay, retests don't feel bullish; they just break out. Okay, so it's not a feeling. You got to actually pick your points. We got the same structure, we got the same breakout, we got the same disbelief. Don't wait, for Bitcoin's confirmation, Ethereum's confirmation. If we look, I'm talking about here. I should have changed the chart. All right, there it is. That's what I was looking for right there. We got Ethereum that's mirroring Bitcoin, the 2020 breakout of Bitcoin. We got the same structure, same breakout, same disbelief. You can't wait for confirmation. Okay, you got to pick your battles. You got to pick your point where you want to get long. You got to use good stop losses. You got to trade with your head and not over it. For sure, you got to get into our pro group. We will help you. All right, so let's move over to Bitcoin, Ethereum itself. Oh yeah, well here's Ethereum. We know where Ethereum's going. We got Ethereum walking a ladder. Okay, here's the bullish retest right now. We got to break out of 4,700 before we can actually hit the $6,500 target. Of course, there's going to be some to and fro, and we'll guide you through it. So just make sure you share the channel with all your friends and family, because we only got the best. We only got the best intentions for you, that's for sure. All right, let's look at Bitcoin dominance. All right, now we know Bitcoin dominance fell out of the ascending broadening wedge, but it's still stuck at 59.31. So therefore, altcoins are bleeding because of it. It's just bleeding. Altcoins are seeing deeper cuts, typical during macro risk off rotation. But GameFi and AI tokens are in a rare green spot right now. They're roughly up 5 to 6% in really short bursts. Okay, XRP still bleeding out. What is it down at 245 right now? I think so. Really, XRP's having a tough time of it. Yeah, it's at 244.87 right now. The XRP army, just hold tight. We'll get that re-rally once Bitcoin dominance falls. The XRP will come back into the spotlight. Right now, people are just they're still recovering from that nasty movement that we had just on Friday. But so before we actually break away, and I'll show you the last charts. I keep talking about getting into our free trade community. You click this link right there, you'll be taken over to our Telegram site, completely free to join, drop insane alpha trading opportunities daily. Get in there. You can't beat the price. If you're a lone wolf, we got two brokers that you could pick from. You got WEX, basically a broker that we use regularly, and BTCC, which we also use. We'll be showcasing them. They're giving a $500 giveaway. WEX itself is insane bonuses. I think it's like free, no fees for life type of bonuses. So if you want to level up your trading, consider getting into these traders. Hey, into these brokers. Brokers are very, very important. Spreads are very important. If you're feeling altruistic, come on over to Park Avenue Trading. Come on and join. It's my little fledgling FOREX site there, where I'm your chief dealer, guiding you through madness every day in the FOREX market. I love FOREX trading, and I like Bitcoin trading too. But if you're feeling great, if you're feeling cool, if you're feeling like you want to help good old Tom out, come on over and join. I got a bet going. I'm trying to get to 1,000 subscribers within a month and a half. Woo, it's a little bit tough. All right, so let's just come on over to where I'm at Bitcoin right there again. All right, so we see the dominance basically is still high. What's driving it isn't just crypto news, it's macro pressure, right? So we come on over to total crypto market. What we're seeing is really what looks like the same that we've seen before. All right. Back in 2019, 2020, things looked kind of bleak, and look what happened to the marketplace. I mean, it feels exactly like December back in 2020 right now. And what happened afterwards, 800% increase. So it's going to take some time, because we got Bitcoin that is still, the dominance is still very, very high. I've always said that we need to break below like 57 and a half to actually really start pushing altcoin season. But just hang tight. It's coming. Okay, it's coming. All right, so we're watching Bitcoin right now try to stabilize above like 111, 112, and Ethereum to reclaim 4,200. Now, as gold keeps rising, remember the correlation that we talked about. Okay, that's going to kick in eventually. It's going to extract, Bitcoin will attract micro hedge capital. Historically, gold's strength in periods of policy tension has preceded, and then multi-week Bitcoin rallies 2020, 2023, and potentially it's now happening again. I made the whole case for that. All right, so now we know pros know the difference between noise and narrative. When volatility hits, don't trade emotions, trade the structure. All right, so make sure you come on over to X, follow us on X, where we talk about Bitcoin, crypto all day, every day. And what do you got to do? Well, okay, you got to join our free pro group. Okay, you got to do it. Okay, if you don't want to do that, well, you got to do your own research. As you know, I'm not a financial advisor. I'm a trader just like you. You got to trade with your head, not over it. Don't bet the rent money. Don't bet the deli to win a pickle. Don't bet the deli to win a pickle. And as a short-term trader, you got to enjoy the party and you got to dance near the door. I'll see you tomorrow. Safe trading, profitable trading. Cheers.